In this video, I will explain the reason behind the sudden drop in Palantir's stock price. But for more videos like this, I need you to like this video and subscribe to the channel. If you support my videos, I promise to be your best guide in learning about this field. Also, at the end of this video, I will explain how you can get up to $30 worth of free cryptocurrency and stock shares completely for free. So, make sure to watch until the end. Currently, Palantir's stock is highly overvalued and does not align with the company's actual revenue. In 2024, Palantir saw an approximately 340% increase, which raises concerns among some investors about the misalignment between valuation and real revenue growth. The stock's P/E ratio is at an extreme level of 480.44, which is significantly higher than market averages and indicates a speculative growth phase. For comparison, the average P/E ratio of the S&P 500 is around 25, making Palantir's 480 figure highly unrealistic. Recently, Palantir's stock price has been heavily inflated due to the AI hype. For example, even though the company's revenue only grew by 18% in 2024, its stock price increased by 340%. Don't you think this is abnormal? Another reason is recession fears and the uncertainty in the market. According to JP Morgan, the probability of a U.S. recession by the end of 2025 is 45%. Since 61.9% of Palantir's revenue comes from the U.S. market, an economic slowdown could further drag down the company's valuation. Historical examples show that overvalued companies can lose 50% or more of their value during a recession. For example, during the dot-com bubble, Cisco and Amazon experienced similar declines. Likewise, during the 2008 recession, Microsoft stock fell by 50%, making a similar scenario possible for Palantir. The third reason is Palantir's inclusion in the S&P 500. After joining the S&P 500 in September 2024, Palantir's stock surged by 50%. However, historical data shows that 79% of companies that enter the S&P 500 experience at least a 10% drop within the first year. This is due to a valuation correction after the initial surge caused by index funds automatically buying the stock. In Palantir's case, the 50% increase was mainly driven by these funds purchasing shares. Once this buying wave ended, a return to real valuation was inevitable. Furthermore, Palantir's stock is currently at an all-time high. No stock rises indefinitely. At some point, the trend has to correct itself. The best examples of this are Tesla and Boeing, which experienced declines after being added to the S&P 500. Another reason for Palantir's stock drop is that the company pays its employees with stock instead of cash. In 2024 alone, Palantir issued $1.5 billion in stock-based compensation. If this amount were deducted from revenue, the company would actually be operating at a loss. Imagine a company with $1 billion in revenue and $800 million in expenses before stock compensation. That would leave $200 million in net profit. However, if the company then issued $300 million in stock-based compensation, it would result in a $100 million loss. To avoid reporting losses, companies choose to pay employees with stock instead, allowing them to declare a net profit of $200 million in financial reports. This raises concerns among investors about financial manipulation, leading them to sell their shares, which negatively impacts the stock price. Some analysts are pessimistic about Palantir, while others are optimistic. For instance, Wedbush predicts that, due to AI, Palantir's stock will reach $693 by 2026. Meanwhile, Bank of America forecasts a drop to $10 per share. Personally, I believe that in the short term, the stock may continue to decline, but this could be an opportunity to gradually buy in and lower entry costs. However, considering Palantir's management, its backing by the U.S. government, and its expertise in AI, the company still has significant growth potential in the long term. The key factor will be how competitive and cost-effective Palantir's AI solutions are. If the company manages to offer affordable and effective AI services, it can successfully compete in the market. Finally, as I mentioned at the beginning of the video, if you want to claim up to $30 in free cryptocurrency or stock shares, you can sign up on the QuantFury platform using the link in the video description. QuantFury offers free cryptocurrency or stock shares to everyone who registers. However, you must use the referral code provided in the description to receive this reward. Also, if this video has changed your perspective on investing even slightly, don't forget to subscribe to the channel and turn on notifications so you don't miss future videos. Take care, and always remember, the $100 investment you make today could make your life 100 times better in 10 years.